Hello investors, this is a video on Tata Motors Limited. This video is brought to you by Smart Investor. Like our videos, share our videos, subscribe to our channel and click on the bell icon for new video notifications. The product and other highlights for the year for Tata Motors India: launch of 5 CNG trucks including India's first MHCV, introduction of new age ADAS, Yoda 2.0, Intra V20 biofuel and Intra V50. Launch of Tiago EV, strong response. MOU with Uber for 25,000 Express T EVs, apart from other MOUs for 20,000 units. Acquisition of Ford Sanand facility completed. Funds received on January 31 for tranche 2, 3,750 crores. Exciting range of products launched by Tata Motors. Update on JLR, reimagine the future. Pre-order books to open for BEV Range Rover. Revenue is at 105.9 thousand crores. EBITDA is at 13.3%. Profit before tax is 5.0 thousand crores. Tata Motors consolidated revenue for the year FY23 is 362 crores and EBITDA is at 13.3%, EBIT margin is 6.8%, profit before tax is 5.0 crores, free cash flows is 7.9 crores. Volume and revenue. Volumes improve sequentially due to strong India demand and better supplies at JLR. Pricing actions and richer mix leading to improved ASPs and higher revenue growth. Profitability, all three core auto businesses reporting strong profits for second quarter in a row. Margins improved due to better mix, pricing actions and easing of inflation. Strong free cash flows of 16.6 thousand crores in second half, leading to a full year auto FCF at 7.8 thousand crores. Operational cash flows and working capital cash rewind aiding cash flows of the company. EBITDA is showing at 6.8%. Net auto debt reduces to 43.7 thousand crores. Revenue growth is at 35% year on year. EBIT improves to 360 basis points year on year. Revenue 1000 crores as for Q4 FY23 is at 105,000 crores. Profitability at 7,154 crores as of Q4 FY23. The company has recorded highest ever revenue of 105.9 thousand crores, highest ever EBITDA of 14.1 thousand crores, strong profit before tax of 5,000 crores, net auto debt reduction to 13.8 thousand crores in Q4. Highest ever revenue for the full year stands at 346,000 crores. Highest EBITDA since FY25 is 37,000 crores. Strong profit before tax of 1.5 thousand crores. Indian debt lowest in 15 years. The company has recommended ₹2 per share as dividend for the year. Q4 and FY23 performance highlights. Q4 retails and wholesales were both up quarter on quarter, year on year, reflecting the continued improvement in chip and other supply constraints. Full year wholesales were up 9% while retails were down 6%. Range Rover Sport production is approaching target levels, ramping up to over 2,600 per week in Q4. Nitra has introduced a third shift. Order book remains strong with 200,000 units, more than 76% of which are RR, RRS and Defender. Profitability, EBIT margin increased 6.5% for the quarter, reflecting higher wholesales and pricing, partially offset by inflation and other costs compared to the prior year. Full year EBIT turned positive 2.4% compared to 0.4% previous year due to higher volumes and stronger mix. Increases in material costs were offset by pricing actions. Profit before tax and exceptional item of £368 million, positive for Q4 but negative for full year. Refocus continues to drive value generation with 1.1 billion delivering during the year. Cash flows and liquidity, £815 million of free cash flow in the quarter with break-even volumes at 300k free cash flow for the full year. Net debt is decreased and total cash is £3.8 billion as on 31st March 2023. Strength in average revenue in the last 5 years. Average revenue per unit in FY23 is 70. Semiconductor supply improved, agreements in place with key suppliers now improving visibility of chip supply, except gradual improvement to continue over FY24. Wholesales in Q1 expected to be similar in Q4, reflecting 60 planned production days compared to 64 production days in Q4. Continue to manage other constraints in the value chain. FY23 average weekly RRRS production 2600 in Q4 FY23. Significant inflation headwinds offset by refocus in FY23. Market performance 600 million pounds value contribution, primary repricing and optimization of available semiconductor using data analytics, costs of 100 million pounds labor and quality saving through agile transformation activities. Investment of 400 million pounds, investing savings through applying strict payback criteria on non-production spend. China market update. JLR FY23 profitability highest in 5 years with premium market volumes steady at last 2 years. On sale now, Velar offers the quietest MY24 Range Rover Velar. Velar offers the quietest experience on the road, extended electric range, offers introduction into everyday electric luxury mobility of the future. New floating infotainment system exemplifies reductive modern luxury design philosophy. On sale now. Coming soon is Range Rover Sport SV. Hotly anticipated Range Rover SP builds on a legacy of revered SVR. Fastest luxury SUV will be available in pre-order by invitation only. Limited model edition will feature groundbreaking new technology not seen before in RR models, launching in May 2023. Looking ahead, the company committed to consistent, competitive, cash accretive growth while deleveraging the business. Outlook for FY24 remain optimistic on demand despite near-term uncertainties while anticipating moderate inflation. Company aims to improve further and deliver a strong performance in FY24. Momentum to build through the year, focus in seasonality and stabilization of JLR supply chain. Company's priorities include to continue improve supply availability, focus on brand activation to secure order book, execute reimagine plans flawlessly, deliver 6+ EBIT margin and 2 billion pounds free cash flows and less than 1 billion pounds of net debt by FY24. Vahan market share starts to recover, HCV, LGV and passengers recover in India, MGV to be addressed priority. Tata commercial vehicles volumes, strong recovery, is currently at 112.5 in Q4 FY23 and 392.9 FY23 for wholesalers. For retail domestic is 114.2 and retail domestic is at 397.2. Powertrain mix is shown here. Q4 revenue at 21,000 crores, EBITDA 10.1%, PBT is 1.7 thousand crores. Double-digit EBITDA margin in Q4. Rebound in volumes led by HCV and passenger segment, some element of pre-buy in the Q4 volume numbers. Improved mix and pricing actions drive higher ASP and revenue growth. Profitability. Demand pull strategy started yielding to fresh results as profits and market shares improve sequentially. FY23 EBITDA and EBIT margins improved by 370 points and 480 BPS respectively. Strong profit before tax of 3.2 thousand crores in FY23. EBIT is at 8.6% and PBT is 1.7 thousand crores. The company continues to lead on key customer facing metrics. Top of mind awareness is at 57 in FY23. Net promoter score is 71. Composite satisfaction score is 813 and dealer satisfaction index stands at 809. Brand power at 45.7 and consideration top box is at 56. This is as per the composite CSAT measurement studied in FY21. Tata commercial vehicles, an overall update. Key highlights include industry continued its upward growth trajectory, plus 22%, 40 plus new products and 150 plus variants launched in FY23. Highest annual and quarterly revenue, improved Vahan share in Q4 versus Q3. After the shift to demand pull strategy, non-vehicle business grew at 30%. Spares and service penetration improves further. EBIT improves sequentially, highest in 21 quarters, led by discount pullback, cost reduction, and commodity softening. The bright spots in Q4 FY23, strong demand led by M and HCVs and robust recovery in passenger carriers, improved net promoter score and brand power by 300 basis points. Entire portfolio transition to BSV 6-stage phase 2 with improved competitiveness on TCO, comfort and convenience connectivity. With the new CNG pricing guidelines, there is 7-9% reduction in CNG prices, which is expected to improve the demand for CNG-powered vehicles. The focus areas for company include continued focus on Vahan share and realization improvement with enhanced engagement with all stakeholders. The company has established B56 Phase 2 product in market with focus value communication. Scale up EV scales, ACE, EV and e-buses. Continue growth in downstream, international markets. Focus on maintaining market shares, margins and channel health as most market operators at low volumes. Tata Motor has been giving a decent returns to the investors in the last 6 months. Currently trading at 569. The share has year high of 575 and is trading well above the moving averages. The 200 days moving average is at 440, 100 days moving average at 446, 50 days moving average 487 and 20 days moving average stands at 520. The current price of 569 is well above all the moving averages. The share is likely to do well in the coming 6 months to 1 year. Long-term investors should avail any dips in the counter, buy the stocks and add to their portfolio. Thanks for watching this video.